Good morning, everyone, and welcome back to this new edition of the Daily Analysis. So, as usual, let's do a recap of what happened on Friday. Basically, it was a day that went by, essentially sideways, with a few upward moves here and there, only to end up closing right within a range that we had clearly identified for Friday. Over the weekend then, there was the downgrade of US debt by Moody's, but basically I don't think this is what was able to move the markets, and as I also wrote in the chat, it was something that the markets and operators had already largely priced in for some time, that US debt no longer had a AAA rating in terms of solidity, so this didn't cause any significant movements either in the indices or in bonds. At the open last night, there is a bit of a downward pressure, but it's probably due to a bit of lost momentum from the strong recovery that took place after the lows recorded in recent weeks at the start of the announcement of tariffs by Trump. It's also true that the market has only been open for a couple of hours in a European session. We're moving a bit in the negative, meaning we're hovering around the day's lows, so we definitely need to pay attention, even though, as I said, I don't think there's any immediate downward pressure at play just yet. It's definitely a loss of momentum in the upward movement we saw in the last few days of recovery, so it's certainly a loss of momentum. Let's take a closer look at the operational details. So as we were saying, for the Nasdaq, we're already at the minimum levels, basically of today's session. If necessary, I'll provide some additional support cases this afternoon. Plus, of course, you have the weekly levels if you're one of my subscribers. So, as we were saying, at the moment, the movement looks good, quite strong, even if it's not accompanied by high volumes. Probably we're looking for a bottom for the day, which could also be a retest of this area here around 21,000. So, absolutely, maybe it will bounce back up and re-enter the range. We'll see what happens. For now, as I said, let's keep monitoring this area. These are all potential support zones that we can take advantage of, either for long entries or if they're broken as support for a continuation of the movement. On ES, the situation is similar. Here too, we've just broken the recent low and we're heading towards the lower end of my range. The movement here as well is quite strong, but again, not excessively supported by volume. So we could probably go and test this area here around 585 and 7060 for ES, and then maybe recover from there. We've lost a bit of momentum in this recovery, and the same thing is happening with the European indices, a bit of a loss of momentum. So we have to. It's not a sign of a reversal of that strong recovery we've seen, but it's definitely a warning sign that we need to, keep in mind. The important area to keep an eye on, in my opinion, is 5,900, 5,890 to 5,900 for ES, to try for a recovery towards the 5,930, 5,950 area, this area here. On the downside, obviously, we need to monitor 5,890, but then these lows here, so around the 5,860, 5.870 area. Let's obviously take a look at the Dow Jones, which at the moment is holding up a little better. Basically, it's maintaining the lows set on Friday for now, so there's a bit of momentum selling here too, but it's less pronounced compared to the Nasdaq. We'll see if it manages to hold this low. What I'd be monitoring right now is first of all a possible test of the VIX area at the low, which corresponds to this whole zone of lows here. If this area were to break, it could easily bring prices back to the 42,000 area, so around 41,900 to 42,000.
On the downside, on the upside, of course, we're monitoring this area here, which currently corresponds to OERSD1. However, at this moment, it has obviously become resistance because it was breached. And secondly, of course, the HV level. Let's also look at the Russell, which is heading toward the 200 mark. It's currently moving toward 280. So it's already reaching levels that we absolutely need to monitor. We should keep an eye on the area between the value area low and the range of the minimum. That's the area to watch. As you can see, it corresponds to this low here. So a break of this area could trigger some rather significant movements. If it holds, obviously, it could first lead to a recovery of the upper area of the VIX clusters down to and then possibly even a recovery of this area here, which will be the hardest to reclaim. That is the 200 area. Let's look at the DAX, which opened a bit sideways this morning. As I was saying, even the European indices and the European futures are losing a bit of momentum. In particular, the DAX more so compared, for example, to the Euro stocks, the FIB or the banking sector. And certainly this is also a situation to keep an eye on. At the moment, the market is moving sideways. It basically tested Friday's lows and then immediately recovered from them. We're still trading below HV, so this is another situation to monitor because a break of the SD1 level could push prices into the VIX area as well. On the upside, of course, we're watching SRD1, which also corresponds to the entire VEX area, recorded on Friday. Let's take a look at oil. Here it is. It made a bit of a move at the open, probably cleaning up the order book a bit. At the moment, it's basically resting on SD1. A bit of a drop could keep it within this range defined by these two opening candles. So between 61.30 and 62.40. It could move within this range. Breaking out of this range could bring prices back down to the 60.50 area. On the upside, instead, we're going to monitor this area here, which is 62.20 to 62.30, excluding this spike, as it seems to me the toughest area to break through. If it manages to surpass 62.20, it could push prices back up to the 63.50 area. Let's take another look at gold. In short, we're still in this fourth wave, which went to retest very precisely Batasam at the open at the start of the regular trading hours. Then it went down there, and now it's trying to move back up. But here too, it's a situation to keep an eye on because it could go on to complete this fourth downward wave. Or it might break out and recover some ground to the upside. This is definitely an area to watch right now, as it's acting quite clearly as a resistance. We also needed to look at the SPX, which on Friday reached the target we had indicated in an impressive way. In fact, it closed exactly on the target we had mentioned several times. I had thought about doing this earlier, but let's do it together now. Let's duplicate the retracement wave that it has always made so far. So basically, we can expect a retracement of this magnitude. Then if it does indeed make this kind of retracement, we could go on to redraw a sixth upward wave. It seems to me that at this point we have 1, 2, 3, 4, 5, and we'll go on to draw a sixth upward wave and see where this projection might take us. For now, we've already started this retracement wave. Let's also take a look at Bitcoin, which as a consequence of the slight loss of momentum in the US tech sector has also faded a bit. Last night it too touched its minimum range, only to recover afterwards. We're working on value areas, also known as LUV here as well. This is an area that absolutely needs to be watched at 1 or 2. There is a risk of a dip into the 100,000 area because that would in any case complete an upward range. Instead, let's monitor the recovery of SD2, which at this moment will obviously act as resistance. Okay, with that said, we've reached the end. There are no significant macroeconomic data releases. It's a rather light week, except I believe on the 25th next week, when the important earnings season should wrap up with Nvidia. So it should be a quiet week in terms of data, but we always need to keep our ears open for any news that might come regarding tariffs. Okay, as I was saying, we've reached the end. As always, I invite you to leave a like on the video, follow me on social media, and we'll catch up later in the chat. Thanks to everyone for your attention.